Hello trader, hope that you had an enjoyable trading day. So I was looking at gold. As you can see on the lower time frame, with the market opening, gold started to drop towards the liquidity zone. As we have seen past couple of weeks, gold was in a very strong uptrending market. After this move, we see that gold currently coming down for a deeper pullback. So let's see where we can find trading opportunity in the upcoming session. I will be first of all looking at higher time frame to see overall picture in the market. Now it is almost at the end of the month. We see that gold has formed so far a very strong bullish market structure. This current monthly candle, as you can see, had a bounce from this monthly support. Now if we look at this monthly low, we can see that gold has failed to create a new lower low, creating a higher low. Gold had a bounce. Now there is a significance behind it, as we see that from the monthly perspective, this is an uptrending market structure. With this impulse followed by this correction, we have seen another impulse followed by this drop, almost has come back to this monthly support level. This is the monthly support where we saw that gold has formed a higher low and then had a bounce. Now if we look at this historical perspective on gold, we see that the market was respecting this support level for an extended period of time. Even if we can extend this level for longer term, we see that gold was respecting this level. If we look at this support here, there was a bounce, and every time the price was falling back to this support, having a strong bounce to the upside. And we saw that this monthly candle has bounced from the same level of support. As we see that at the top there is an all-time high, and what I think that the price has failed to create a new lower low. There is a near miss here. We could see that the price will go back up to create a new higher high, or at least a lower high is expected. So there is a high probability that gold may go back up to 2080 or breaking this high. Now this monthly candle so far after this move now coming down for a deeper pullback, and I think that we can expect further downside on the lower time frame before another pickup to the upside. Now looking at the weekly time frame to see how the market is doing, we can see that from the weekly perspective there is a huge bullish engulfer followed by a middleman followed by another bullish candle. Now last week we saw gold has formed a candle that has a long wick at the bottom. So what we could see now, the price is coming down back to this level, testing around 50% of this weekly long wick candle before moving to the upside. Now at the same time, if we take our Fibonacci for this impulse to the upside on gold, we see that the market is approaching this Fibonacci level, which is 38.2% Fibonacci level, which is below this weekly low. Now this any of this zone we can expect a retest before moving to the upside on gold. Now looking at the daily time frame to see overall picture. Now from the daily we see that gold is still maintaining a very strong uptrending market structure with this impulse narrow correction, impulse correction. So back to back quite a few bullish wave has been created. Now last couple of days we saw another impulse. Currently the price is coming down for a deeper pullback on gold. Now this is the weekly level that we are expecting, and below this Fibonacci level. Now highly likely either gold will come back to this level to retest or even breaking this low. If gold managed to break the low, then we could see that it's coming even to this Fibonacci level, which is less likely. What I think that gold might have another bounce from this level, as it is still maintaining a very strong uptrend, and less likely it will break this market structure to come back to this level, which is also possible if we see a very sharp drop with the news or for any other fundamental reason. Now what we see from the intraday perspective, that gold here it is maintaining a bullish market structure. Now let's look at 1 hour chart to see a bit more clearer picture on gold. Now here we see that this is a move that last session of the trading week last week we have seen happen, and which in fact looks like a fake move. That means that we could see gold again coming back below this move. This is the starting of that move, and below this level there is a high liquidity. Now if we draw this trend line to see where we can expect gold to come back down, and this is where we see the 50% of this weekly long week candle, and below this level is where we are expecting gold to come back. And I think that gold, the way it is dropping now, we could see that gold is dropping down below this level, and from that zone we can expect either an upside bias moving towards its long-term direction, or if we see that it's consolidating here, probably we'll see it's coming back to this 38.2% Fibonacci level, which is a long-term picture. At the moment, what we will be waiting on gold, if we see that, as you can see on the lower time frame, even in the 15 minutes chart, it's maintaining a sharp downtrending market structure. We'll look for selling opportunity, any break of the swing high, as we see that if we see gold has broken any of this high along this way, we can expect some downtrending movement in this market. So along this zone, we will look for selling opportunity. On the other hand, if we see that gold has sharply dropped below this level, especially below this liquidity zone, we will look for buying opportunity towards its long-term uptrending direction. Guys, if you enjoyed this analysis, give a big like and also subscribe to the channel. Thank you, and I'll see you soon in my next analysis.